With the whole year ahead of us, what is going to happen in the housing market in 2023? What's happening? I'm JC Agajanian, broker associate with one of the largest teams here in San Diego. And in case you don't know me, I'll give you a bit about myself. I got involved in this industry a long time ago, nearly 20 years ago as a mortgage broker. And then I transitioned into a foreclosure specialist, survived the downturn selling foreclosures for banks before transitioning to traditional real estate, selling homes and helping buyers here in San Diego on a regular basis. So been around, been doing this for a long time, and I've got some ideas on what I think we are going to encounter as we move into 2023, quarter by quarter. So let's take a look at it. First of all, let's not deny it. We're in a declining market, right? We actually peaked out earlier than my memory recollects. We peaked out in April of 2022 with about an average sales price here in San Diego County of $1 million. Now, in December, that average sales price is down to about $885. So that is a 12% decrease in just about 8 months. So we have been losing value, and it's happened pretty quickly. Things haven't fallen off a cliff because we actually, surprising or not, still have pretty solid buyer demand when compared to the amount of inventory on the market here in San Diego County. However, we are realists here, and so we want to just let the data lead our thoughts and give our best counsel to our clients and our friends and our family that we can. And so that's where I'm coming from here this morning. So the reason for the decline in the market, we believe, is pretty much solely due to mortgage rates. I mean, you can just think about it. A 30-year fixed rate in January was possibly in the high twos, definitely in that 3 to 4% range. And today, you're lucky if you're going to get under 6%. We had rates peak in the mid to upper sevens earlier this year. So we've got a full doubling in the mortgage rates that have happened in a short period of time. Most of that doubling happened between May and August, September. I mean, it just shot up quickly. It was a jolt to the market, especially for us that work in the market. But that rate change is what's pushed a lot of people that were maybe considering buying just to the sidelines. So we have significantly less demand than we had before, but the demand we had before was just unsustainable. It was out of control and it was stressful, especially for all buyers involved and even some sellers. So why did they go up so quickly? Mortgage rates often tend to follow the inflation rate. So we had inflation peak out right around 9% this year, and that pushed rates to that high spot that I was talking about, and over 7%. Now, recently, we've had CPI coming down, which has also caused inflation to come down, and therefore, rates have actually pulled back a bit. And like I said earlier, you can in some cases get rates in the high fives, definitely in the low to mid sixes right now, which is a full point lower than the peak that we saw just a few months ago. So right now, we've seen the inflation rate come down to the 7% range, and there's predictions that we will be back down to the 4% range by the end of the year. So what's our prediction for 2023? Well, we think we're probably going to continue in this trajectory for the first quarter of 2023. We're going to continue to lose ground in value. But we do think that there's going to be a bit of a leveling out. So we're kind of coming down, and probably Q2 and Q3, we're going to hopefully bump along the bottom there. And then either in Q4 of 2023 or possibly the following quarter, the first quarter of 2024, when both inflation rates and mortgage rates have settled back down into that 4% range, we should see definitely a stabilization, if not a full-blown recovery at that point, to where there's a strong buyer demand coming back to the market, because the buyer demand hasn't gone away. They basically just pressed pause on the program, because we still have, like I said, we definitely have under 2 months supply of inventory in San Diego County right now, which is historically just indicating a seller's market. But because so many buyers have said, we're going to go ahead and wait for a better rate, things are falling a bit. But that inventory level is still low. We call a neutral market that 3 to 4, maybe even 5 month range for inventory on the sales side. So we're not there yet. And that tells me that as soon as these rates are palatable again for buyers, there's going to be not the same market we had before. That was crazy, but there's going to be a much stronger market again, and probably even stabilization and recovery in the upward trajectory again, like I said, as soon as Q4 23, possibly Q1 2024. So what does all of this mean to you? Well, if you're thinking about buying, I say, especially if you're a first-time home buyer, buy as soon as it is financially responsible for you and your family. There's no sense in timing the market when you're currently paying somebody else's mortgage. Go ahead and get started paying your own mortgage, paying down that principal of your own instead of paying down somebody else's principal, and don't try and time the market. Not only that, right now, the competition is way down. Instead of fighting over multiple offers and having to pay 50, 100, 200K over asking, there's a good chance you can get that property at or under market right now, or under list price. So get in, and based on all the data that I just sent right here, there's likely going to be a solid refi opportunity inside a year's time, possibly even a little bit longer than that. But as long as you get a loan that's either fixed for 30 years or even a little bit more aggressive loan that has either been bought down for temporary time, maybe 1, 2, 3 years, or possibly even an ARM loan, as long as you know that it's solid for significantly longer than a year or two, you're probably going to get rid of that loan anyways, because most of these loans are going to be refinanced that have been written with these high rates anyways. So if you're thinking about buying, now's actually a great opportunity, as crazy as that may sound with the rates the way they are. It's a great time right now. We've got values that have come off over 12% by now. Sure, rates are higher, but we can mitigate that with various loan programs, and you're going to have a refi opportunity down the road anyways. So no competition, lower values, figure out the loan now, change it later, you're in good shape. Now, if you're selling or maybe selling and looking to move up, well, that's going to depend mostly on your personal situation, what your long-term plan is, what are your specifics. So sometimes it's worth it to just pull the Band-Aid off, make the move now, and get into that next property that's right for you. But in other cases, it might be better for you to hold off and wait and see what happens the coming year and possibly into this recovery. So in either case, I'm happy to sit down and chat with you, give you my expertise, give you some advice on whether or not now's the right time or you should maybe hold off. I had a conversation just like this literally a few days ago, and the timing wasn't quite right for that buyer. But I think it will be in the near future. So whatever the case may be, I'd love to give you my opinion. Of course, I always am looking to make sure that you are going to be in the best position when it's all said and done. But I'd love to chat with you. Go ahead and hit the link here or just hit me up, and we'll talk soon.